Yeah, good morning, everyone. What we see from the international market today is that markets are more of a flattish. Yesterday, US market Dow was negative, though the other two markets were positive. Today morning, futures are a bit positive for the US market. But Asian market, though Japan was closed yesterday, so that's up almost by around 2%. But other markets are more of a flattish, what we get indications. Uh, Yesterday, inflation data came and it came at 3.54 versus expectation of 3.60, and last month 5.08. Though it came below 4%, which is RBI threshold for cut in the interest rate. But what we see that this is mainly because of the higher base last year, and now the base will not be high in the coming quarter and the coming months, and this will again bounce back to over 4%. If we talk about the uh, core inflation, that has shown trend upward as compared to the previous months. So this is nothing to do with the interest rate cut expectations from RBI. Apart from that, uh, the commodities are mixed bag. Oil is up by around $2, whereas aluminum, coppers are flat to marginal. Uh, Aluminum is marginally negative as compared to the price of equity market close, and copper is more of a flattish. Iron ore in China today morning is up by around 1%, and steel is down by around 1%. So quite a mixed reactions from international commodity prices. Rainfall today has IMD has indicated that the rainfall is good and above 7% to the normal, and that sounds positive for the agro-related economy. So overall, today we see that market yesterday had seen some volatility because of the news of Heidelberg and reactions related to that on the Adani stock. They were marginally negative. But overall, seems market has negated that news and running at a normal pace. But we had seen quite a bit of FII selling on that account. So today, what we see that taking clue from the international market, is likely to remain under range here again. After a sharp corrections 6 7 days back, we are not able to catch up fully. So it's still struggling at a lower level. Not earlier, what we used to see that whatever the correction comes, we used to catch up in few days. So this time, the strength required to catch up is taking some time. So need to be careful on that account. I'll request technical team to take up from here.
Yes, thank you, sir. Good morning, all of you. This is Swati. Today, the market is likely to open on a flattish note, and we might see some range-bound trading session during the day. On the technical front, we are witnessing that the Nifty somehow managed taking a support of 24,200 and shown us some sign of a pullback and maintain a positive closing about 24,300, which gives a relief sign on the technical front. Going ahead, for a coming today intraday basis, 24,440 will act as a immediate resistance level. Any move above that level, we expect a positive momentum to be carried forward towards 24,550. Whereas on a downside, the immediate support is placed at 24,270. If doesn't respect that support level, then again we will attract some sort of a profit booking or selling pressure, which might drag a Nifty towards 24,200 to 24,130 levels. The view is bit cautious as long as Nifty stays below 24,440 levels on the closing basis. Coming towards the bank Nifty, for today intraday purpose, 51,000 will act as a psychological resistance level. Above that level, 51,340, 51,440 levels can be seen. Whereas on a downside, 50,470, 50,140 are the crucial support levels we need to keep eye on. Coming towards the Fin Nifty, 23,200, 23,370 are the crucial resistance level, whereas the support is placed at around 22,900, 22,760. Stock specific, TVS supply chains really looks good on the technical front. The stock is well placed above all the important moving averages. It's finding a very strong support of 200 DMA and just heading on a higher sides. We are looking for a target of at least 200, 205 levels on the high sides. So one can take a long positions at the current market price by maintaining a strict stop loss of 186. Lakshmi Organics also looks good, positive on the technical front. Yesterday, we already have initiated a buy call. The stock has managed to give the consolidation breakouts on the weekly chart along with the decent volumes. So we believe this rally is likely to be carried forward towards at least 300 levels. So one can go for a long if anyone has missed out. Maintain the strict stop loss of a 271 for immediate target of 298. That's it from my end. I request Niro to take a call forward.
Yeah, thank you, Swati. On the derivative front, as I said even yesterday, most of the data has turned positive. Importantly, good base building has gone about at 24,000 odd level. So now that becomes a strong support area. The open interest has decreased, which is a good sign. So most of the indices are light on positions, and that is why we don't see follow-up selling coming in, which is good sign for the overall index. We can see further buying for Nifty, Bank Nifty from current levels. It can probably move up above the 24,500 odd levels for Nifty. 24,500 is a small resistance area. Once that is crossed above, you can see further buying coming in at least up till the 24,800 odd levels. So look out for the same. From the stock specific front, most of the stocks, specifically in the banking sector, did well, and we expect them to do well even for today. Now, there is some news, positive news for HDFC Bank as well, but we definitely believe HDFC Bank in the last 3 4 months, the rollovers have been quite positive, and it is light on positions now. Some shorts being covered, which is a very good sign. We expect this stock to move up further from here up to the 1750 odd levels, which can propel the bank Nifty and Nifty as well. So yeah, look out for the same. So that's it from my side. Like to ask the fundamental team to take over, please.
Good morning. RBI has announced some changes in norms for housing finance companies to bring them on par with NBFCs. So out of the 4 5 changes that they have said, 2 are prominent. One is that all deposit-taking HFCs will now have to maintain liquid assets to the extent of 15% of the total public deposits held by them. This figure was till date it is at 13%, so they will have to increase it to 15% of extra liquidity. So 2% extra liquidity of the total deposits held. This they have to do by July 2025. Similarly, RBI also placed a ceiling on quantum of public deposits to 1.5 times of net owned funds, which currently is at 3 times. So now to that extent, HFCs will have to the ability to raise public deposits will be limited to the 1 to 1.5 times of net owned fund. Net owned funds is nothing but mostly your net worth. So out of the listed space, if you see, only PNB Housing Finance has a sizable proportion of their borrowings coming from deposits, which is at 32.5% of total borrowings. So in case of the second largest exposure is for LIC Housing Finance, which is just 3% mix of total borrowing, so immaterial. So if we look at PNB Housing Finance, then we expect basically marginal increase in their cost of borrowing and simultaneously maintenance of higher liquidity. So basically the spread will compress slightly. And in terms of net owned fund ceiling, that won't apply here because it is already below 1.5 times. So it's a marginal negative for PNB Housing Finance. On the result side, Shilcha Technologies, which we have covered previously for our monthly, the result is okay, as company has been operating at full capacity since last 3 quarters. New capacity will come on stream on 16th of August, that is in next 3-4 days. And this will add 90% of the existing capacity. So capacity will increase from 3,500 from 4,000 MVA to 7,500 MVA. And management is confident of utilizing full capacity in the second half of this year. So revenue for the quarter was flat at 107 crore on sequential basis, but up 60% year on year. Margins have declined slightly to 27.6% versus normal range of 29 to 30% seen in last few quarters. Profit came at 24 crore against March quarter 25 crore and last year 16 crore. If one has a potential to hold for 2 to 3 years, then stock can double from here within 3 years. Time Technoplus result has improved. Revenue is up 14%. EBITDA is up 18% year on year. EBITDA margin improved to 14.2% against last year's 13.6%. And even March quarter's 13.3%. Profit came at 79 crores against last year's 56 crores. We remain positive. Power Mech projects, which is a proxy on revival in the thermal power capex as well as infrastructure capex. Revenue and EBITDA both grew by 15% year on year. Margin was stable at 11.3% and profits grew by 18% year on year. We remain positive. Thank you.
Good morning. We had attended a couple of con calls yesterday. The first was Finetics Chemicals Limited. If you look at the quarter performance, it has maintained its performance with a revenue growth of 7% on a YY basis, and operating margins were at 25%. In terms of segment-wise performance, textiles has contributed 46% of the total volumes, while cleaning and hygiene segment has contributed 64%. The management has highlighted the raw material prices are expected to be stable and no further downtrend is expected. Also, higher freight costs and geopolitical issues continue to remain a challenge across industries. In terms of Bangladesh, the company has an office in the country, and it has observed that the production activities were impacted for limited days of 3 to 4 days. Currently, the operations are back to normal in terms of production, while it has seen that things are getting sorted out in the last 5 to 6 days. The management has guided for the continued growth which was observed in the last 4 to 5 years. So if we look at the revenue CAGR for the FY22 to between FY20 to 24, it stood at 31%, and the profitability growth was at 71%. Also, it will continue to focus on increasing the customer's wallet share. The stock is trading at a PE of 23 times to FY26 EPS, and we are positive on the company. PCBL Limited, if we look at the company's performance, it was in terms of result, it was ahead of expectations. Revenue grew by 59% on a YY basis, and operating margins were at 16.7%. The company, the management was very optimistic when it comes to the long-term perspective. It has planned a capex of worth rupees 3,300 crore over the next 5 years, and it expects the EBITDA per ton is expected to be increased by 4,500 to 5,000 per ton from the current level of 20 to 20,000 tons. This is mainly to be driven by the improved product mix. Also, it aims at 20 to 25% volume growth FY26 onwards. Company's overall capacity utilization stood at 75%, and the company is expected to add capacities for the high margin products in the upcoming years. Also, in terms of Aquafarm chemicals, it has observed steady performance, and it has a 24% of global market share, and it aims to achieve 1/3 of market share in the future. The company has net borrowings worth rupees 4,300 crore, and it expects to generate around 9,800 to 10,000 crore of cash flow every year. The stock is trading at a PE of 22 times PE of FY26 EPS, and we are long-term positive on the company. Aarti Industries Limited had posted the results in line with expectations. If we look at the quarter performance, the company has it has given the in line with expectations result. The management has maintained the guidance of 20 to 30% of volume growth, while it has dropped the EBITDA guidance of rupees 14.5% to 14.5 to 17 billion for FY25, considering the volatile environment. Also, it is facing the challenges from the Chinese dumping, so it will continue to monitor the situation, and we are near term, we are negative on the stock. The stock is trading at a PE of 41 times to FY25 EPS. On the results front, DOMS Industries Limited result has improved. The revenue grew by 17% on a YY basis, and operating margins were stood at 19.4%. Also, it has announced the acquisition with Uniclan Healthcare Private Limited. It is a Mumbai-based company engaged in the manufacturing and marketing of baby diapers, baby wipes, and other hygiene products. The stock is trading at a PE of 76 times to FY25 EPS. Senco Gold Limited result was above expectations. Revenue grew by 7.5% on a YY basis, and operating margins were at 7.7%. During the quarter, the company has opened 6 new stores, of which 4 owned stores and 2 franchises. Retail sales growth on a YY basis was higher at 9.6%, and SSSG growth was at 4%. In the press release, it has highlighted that it plans to grow in the range of 18 to 20% this year. The stock is trading at a PE of 33.5 times to FY25 EPS, and will provide the outlook post the con call. Thank you.
Good morning. Wipro's Chief Technology Officer, CTO, Ms. Shubha Tatavarti has resigned. So this is the 4th big departure since the appointment of the new CEO, Srini Palia, in April this year. So sentimentally, this could be a negative for the company. On the results front, Vodafone Idea has reported numbers broadly in line with expectations. The ARPU has been flat at rupees 146 on a quarter-on-quarter basis. EBITDA margins have come at 40% as expected by the street. The they have reported loss of 6,432 crores, which is less than what was expected by the street. So we have a positive outlook for long-term investors on the stock. Secondly, Happiest Minds Technologies has reported numbers marginally below expectations. In the constant currency basis, the revenue have grown 11.4% quarter on quarter, broadly in line what was the street expecting. The EBITDA margins were down 160 bps quarter on quarter at 18.3%. The stock is available at a PE of 38 times 1 year forward earnings, and we have a neutral view on the company. On the IPOs front, there are two IPOs which are getting listed today. The first one, BrainBees solution, which operates as the largest multi-channel retail platform under the brand name First Cry. Just to recollect, it focuses in mothers, babies, and under 12 kids products in India, and also has operations in UAE and Saudi. We had given a subscribe rating to the issue because of its leadership position in the niche segment of baby products, and it was available at EV by sales of 3.8 times FY24 earnings, which was lower than Nykaa, which was trading at 8.4 times. Second IPO is Unicommerce Solution, which is also getting listed. The issue size is 277 crores. Just to recollect, the company runs a SaaS platform and manages e-commerce operations for brands, sellers, and logistic providers. While we do believe that company is poised for high growth in the next few years because of increased traction in the e-commerce industry, but the shares were highly priced at a PE of 83 times FY24 earnings. Thus, we had given a neutral rating to this issue. That's all from me. Thank you.
Yeah, apart from this, yesterday Sangvi Mover had a con call. What they had, the results were subdued and stock corrected thereafter. The impact was mainly on account of in this quarter from the heat wave and elections. For that, company has indicated that there was a lower utilization of their cranes, and which has impacted the yield as well. Even for the Q2, they had guided that the uh, impact of higher monsoon will continue, and that will have an impact on the revenue, which the yield and the utilization can be even lower than the Q1 level. So that has had an very large negative impact on the shares. And what they had indicated that post Q2, the Q3 can again start building up, and they can reach over 80% utilization thereafter. So what we get from this is that the order book which they had declared is out of that large chunk is of EPC order. So if we exclude that, then the crane order has remained flat year on year. As such, the revenue from the crane business may be flat to lower than the last year, and as such have an impact on the profitability as well. So this all indicate that the current year earnings, including EPC, can be more of a at best in line with last year, and we can see growth only in the coming year. No doubt, EPC business company is talking about a big opportunity. They had around 300 crores of revenue, and this doesn't require a lot of capital and has a high ROC business. Company expect to do around 300 crore of revenue in this EPC business in the current year, and next year again they want to grow it by 50%. And in this, the margins will be around 12 to 15%. So, so overall, what we see that no doubt the near-term earning got impacted and will continue to get impacted in the next quarter, and the revival can be seen only in the third quarter. So near-term outlook remain neutral, and long-term outlook continue to remain positive. as the sector tailwind is quite strong. We had seen that the wind farm capacity addition is growing at very fast pace. People are targeting around 3 gigawatt of capacity addition, 5 gigawatt of capacity addition in this year, whereas last year it was 3 gigawatt. So all that will require a lot of cranes to be installed and EPC work to do installations. So tailwind is of the industry is strong. It is in between a hiccup which has come for Sangvi Mover and which can keep the share price near term range bound or at a lower level. So what we recommend that if someone is with the view of more than 6 months can continue to hold the stock. Apart from that, NMDC came up with the numbers and the numbers were ahead of expectations, as was expected, as the iron ore prices were strong in the last quarter. The volume came in at 10.07 million ton versus expectation of 9.3. And last quarter it was 12.5 and last year 11 million ton. Though the volume was lower, but EBITDA per ton came ahead of expectations. EBITDA per ton came in at 2,350 versus last quarter 2,140 versus expectation of 2,140 and last quarter 1,700. So that shows a strong improvement EBITDA per ton. But what we see that the iron ore prices as compared to last quarter average, that is Q1 average, it is down in the current quarter, that is Q2 quarter, July and August month by around 8%. So that will have an impact on the Q2 performance, and Q2 anyhow is a rainy season wherein the volume are comparatively lower. So though the quarterly result was good, but coming quarter are expected to be down. So currently outlook is neutral on NMDC. So that's all from us. Now I'll request technical team, commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So in today's session, we are expecting a soft opening and one should buy on dips. So gold one can initiate a buy around 70,600 to 550 levels and maintain a stop loss of 70,300. On upside, it is to test 71,200. Silver also one can buy 81,200, 81,000 is a good support area. So a pullback is expected. Prices are expected to test 82,200 to 82,800 on the upside. So buying with a stop loss of 80,500 is recommended. In metals, copper one can buy around 785 to 83 and maintain a stop loss of 778. On upside, again, it can test 793, 95 levels. Whereas zinc for trading purpose, one can strictly buy with the stop loss of 257. On pullback, again, it is expected to test 261. And in crude oil, prices are expected to test 6,700, 6,720. But a cautious sign is need to be addressed as the hurdle points are around 67, 67.30. So a profit taking could be witnessed from these levels. However, from downside again, one can initiate a buy around 66.20, 6,600 and maintain a stop loss of 65.50. And in natural gas, prices are expected to test 177, 175, whereby buying can be witnessed. So again, on pullback, it can test 190. So buy on dips in around 175 and take profits around 185. That's it from us. Thank you very much.